Welcome to the Portfolio Manager Career Track of the Philippine Junior Finance and Investment Summit 2021. The future starts now. If you want to post about PJFIS 2021, the future starts now, don't forget to use the hashtags #PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you're posting in Facebook, Instagram, or LinkedIn. As a reminder, the evaluation form is available in the CFA Society Philippines mobile application. We have an evaluation form for each day of the PJFIS 2021. This is part of your requirement to get an e-certificate, and you should attend at least 70% of the whole summit or at least 13 sessions to get an e-certificate. I'm DJ Jesus, Product Manager of Atram, and I'll be your host today. We're sure many of you are excited to know what a career as a portfolio manager is like. For this afternoon's first breakout session, we will be having a panel discussion from seasoned portfolio managers to answer frequently asked questions about their role. Joining us for the panel discussion is the Head of Equity, Fund Management of Security Bank Trust and Asset Management Group. He joined Security Bank in 2015 as an equity fund manager and was eventually promoted to the head of equities position in 2017. Prior to joining Security Bank, he was a portfolio manager and strategist and equity research analyst at First Metro Investment Corporation. He was also an equity research analyst at the Center for Financial Research and Analysis, an MSCI brand, and a business area controller at Deutsche Knowledge Services, where he was a London equity proprietary trading controller and a London Global Equity Derivatives Index Structured Controller. He became a CFA charter holder in 2015 and graduated with a degree in BS major in management, minor in economics and finance from Ateneo de Manila University. Let's give a round of applause for Mr. Basil Go, CFA. The next member of our panel is the head of Metrobank's Trust's Portfolio Strategy and Advisory Division, driving the group's research, credit, and portfolio solutions activity. He has developed 11 years of his banking and asset management career by holding various positions in the Metropolitan Bank and Trust Company. Over the years, he held positions in the bank's treasury, market sales, and trust banking group covering asset liability management, financial institution sales, portfolio management, and global markets. Apart from his usual business activities, his advocacy for continuous education is ingrained in his endeavors. He facilitates the in-house lectures on portfolio management for the new asset management team members and for the bank's other units for further appreciation of the business and industry. Don graduated with a double degree in European Studies and Management of Financial Institutions from De La Salle University, Manila in 2010. He is a chartered financial analyst, a certified treasury professional, and an SEC certified fixed income salesman. Let's give a virtual round of applause for Mr. Don Hernandez, CFA. Rounding out our panel is the portfolio manager for global funds at Sun Life of Canada, Philippines, where she manages global equity, fixed income, and balanced portfolios. She was formerly a quantitative analyst upon joining the company in 2015. Previously, she was an associate portfolio manager at the Bank of the Philippine Islands, responsible for managing multi-asset and multi-currency segregated accounts and optimizing strategic asset allocations for modeled portfolios. She graduated with a bachelor and master's degree in applied mathematics, major in mathematical finance, and minor in economics, honorable mention from Ateneo de Manila University. She became a CFA charter holder in 2017. Let's give a virtual round of applause for Ms. Nicole San Juan, CFA. And finally, our moderator for this session is currently an assistant professor of the Department of Accounting and Finance at the Virata School of Business, my alma mater, University of Philippines, Diliman. Prior to joining the academe, she was vice president and the head of investments and managed portfolios of United Coconut Planters Bank Trust Department. With more than 14 years experience in managing investments, She has held various positions in different institutions, both foreign and local. She was recognized as one of the most astute investors in local currency bonds by the Asset magazine and has received awards for her performance in managed funds. She was previously a volunteer of the CFA Society Philippines, conducting sessions promoting the CFA program and handling the scholarship program. She received her master's degree in international commerce from Korea University. Moreover, she completed the Certified Professional Manager program of International Federation of Professional Managers Philippines and the Business Economics program of University of Asia and the Pacific. She finished her undergraduate degree in business administration and accountancy from the University of the Philippines, magna cum laude, and she is a certified public accountant and CFA charter holder. Let's give a virtual round of applause for Ms. Karen Jonas, CFA. Now I hand over the discussion to Ms. Karen Jonas, and she will be moderating the panel.
Thank you so much, TJ, for the introduction. So I'm sure everyone is excited already to learn about portfolio management. So we are very fortunate to have very seasoned professionals in our panel and spanning from those managing international securities as well as local securities and those giving advice and portfolio strategies to the portfolio management team. Okay, so maybe let's start off. Okay, Nick is handling global equities, fixed income, and portfolio management funds in Sun Life. Maybe you can share with our audience today what are your main responsibilities as a portfolio manager. And also, a while ago, it was mentioned that you started as an analyst. What changed from your role from being from an analyst role to a portfolio manager role?
Okay, hi, thank you, Karen, for that question, and good afternoon, everyone. So, as mentioned, I manage the global funds portfolios at Sun Life, particularly the insurance side. So those would be your VULs. So I look at the global portfolios, so spanning from equities, fixed income, and balanced portfolios. And the structure of our investments in these global funds are in a fund of funds, what we call a fund of funds structure, meaning our fund invests in various funds. Unlike what you may probably hear from our other esteemed panelists here who invest directly in securities. So I think this is the most efficient way of gaining exposure in global assets. So you can gain exposure in American equities, European equities, investment grade bonds, high yield bonds, and the like. So just to give you an idea, the global equities index that we look at has about 3,000 securities, whereas the PSEI, which is the local stock market index, has only about 30 securities. And on the global fixed income side, there are about 28,000 securities or bonds in it versus the local GS space, which covers about 60. Prior to this role, I was a quantitative analyst, so I prepared attribution reports for portfolio managers, and that's how I actually got interested into the role. So I was previously reporting about them, and then I admired how they generated good performance, so I wanted to become one eventually. Yeah, so that's how I transitioned from an analyst to a portfolio manager.
It sounds like an interesting role, no? Looking at fund of funds. So I'm sure you have a lot of interaction with foreign fund managers. Okay, how about you, Basil? Would you describe to us what it is to become the head of an equity fund management asset management firm? And if you could just maybe show us, tell us as well your transition from a portfolio manager to becoming the head.
Yeah. As I mentioned earlier, I joined Security Bank way in 2015 now. So I've been with Security Bank for over 6 years, roughly 6 years now. So I started as an equity portfolio manager. So it was quite a big jump now from my previous firm in First Metro Investment to Security Bank. In First Metro, I was just handling a little over 500 million pesos. But from 500 million pesos when I transitioned to Security Bank, it wasn't an immediate jump, no. But I eventually, from 500 million pesos to around 30 billion pesos in equities, no. When I started in Security Bank, I handled much smaller accounts, no, a little give or take 10 billion. Then eventually in 2017, given that I managed to do well for the funds, no, they promoted me as head of equities, thankfully in 2017. So I've been the head of equities since for 4 years now. If you look at our funds, no, if you look at any bank, we handle UITF. So like any other bank, we have our balanced fund, which is a mix of equities and bonds. We have a high dividend fund, and we also have a peso equity fund. Though that's our main fund, and we also handle several EMA accounts. No, that's our managed accounts, which are basically like retirement accounts, foundations, for pre-need accounts, and so on and so forth. So we handle a whole breadth of accounts, no, just to whether active or passive for our clients. Yeah.
Okay, I guess from your story, we know that fund performance is very much important. It's a key deliverable of portfolio managers so that they can get promoted and get ahead with their career. Okay, so we are also joined by the portfolio strategies, the head of portfolio strategy and advisory services from Metrobank, Don. Hi. So
Hi.
maybe you would like to share with the students and our viewers what it is to be the chief strategist and an advisor to clients in Metrobank.
Yeah, thank you. No, since the topic's more on portfolio management, basically I'm on the other side of what Basil and Nick has been doing. I was there before, doing portfolio management, making the investment decisions, but we made the decision in the bank to, there's in portfolio management kasi there's portfolio management or the strategy execution, but there's also strategy formulation, and that's where I come to play now. That's why in my introduction I was covering research, I was covering credit or investment evaluation. I'm covering portfolio solutions, basically making sure that what the portfolio that will be sold to the clients or for managed funds and even for the UITFs is in line with the strategy. So before we can even make investment decisions, we want to make sure that our portfolio managers have a basis of making those decisions. No, so we build the portfolio, we propose a portfolio, and then portfolio managers will execute it. So basically, that's what I do in general now. No, so yeah. This is more in addition to what Basil and Nick has already said. They've covered what's important in becoming more of a portfolio manager. And I guess one more thing, it's I'd like to add, it's a client-facing, it's a customer-facing job, no, or practice. So if you guys are thinking portfolio management is really just numbers, no, it's not a. Yeah, you can say it's an office job, no? Pero pero talking to the clients is actually one thing that's also exciting yet dreading, no? Function of portfolio managers, especially if yan si Basil pagka outperform, yeah, let's go to the client. But if we if of course if there's a trouble in the market, it's pretty difficult. Nevertheless, that's the full cycle of portfolio management. That's the full cycle of our jobs in portfolio management.
Okay, so that's an interesting point to note, no? So portfolio management is not just finance. It's really more of developing as well the soft skills. And then when you deal with the clients, you have to be sort of the marketing guy as well. So, so Don, if you could give a percentage, what percentage are you allocating to clients, and then what percentage are you allocating to the strategy part or the quantitative part?
Well, in my current job, it's actually malaki yung the quantitative part, no, qualitative and quantitative. That takes 70% of my job as a strategist and advisor. But back when I was still a portfolio manager, I would say it was 50-50. A huge chunk will have to be managing the clients as well. No, it is as it's important in managing the portfolio of the owners. It's as important as managing the client themselves.
Okay, that's true. That's true. So for those of you guys who are thinking of going into portfolio management, then you can also consider that it's not just quantitative. So if a part of you likes talking to clients, and maybe then maybe the role is for you. Okay, so um, okay, so maybe you can guide the viewers on how you were able to build a career and your current roles as of the moment. What skill sets are necessary, and which training or which courses did you have to take to be able to get into your existing or your current role as of the moment? Maybe let's start with Basil now.
All right. I'm not saying this just because I'm part of the this conference, right? But definitely, I would recommend, especially for fresh graduates, to really start with if you're really passionate about finance and you really want to be a portfolio manager. I guess one way you set yourself apart from your colleagues is to take the CFA charter, no? Because right now, it's really competitive. The industry is quite small. You only have a handful of buy-side institutions locally. So the way you differentiate yourself is to take the charter, right? So that's one thing. I guess beyond taking the charter, I guess for me there are several critical aspects of being a successful fund manager. No, first is you have to be an avid learner. For me, after grad, I mean you don't stop learning after graduation. That's the I mean after graduation, after you start working, you'll find out that there are a lot of things that you don't know about. So I mean, for me, I never stop learning. I never stop reading. So I read a lot of books. I read a lot of news. That's the way you grow in your career. And secondly, I guess an important aspect of a fund manager is being humble and being flexible. No, because in this job you'll make a lot of mistakes. Believe me. If you're not humble, if and you don't admit to your mistakes, that will be costly. That could even cost you your job, right? So if you're not humble and you don't admit your mistakes, that could be detrimental, no? So just and thirdly, I guess a critical factor is kind of related to the previous one is being flexible, no, being open-minded, be looking at the opposite view in everything that you, whether you're buying or selling a particular investment, you have to look at the opposite or contrarian view, no. Why is it, if the stock is so cheap, why aren't people buying it? Or if a stock is so if the stock is so expensive, why is it still going up? You have to look at the opposite view and be objective. That is quite difficult because we're at the end of the day we're human beings, right? We're emotional. So being able to remove that emotion in your decision making process can be quite difficult, but you eventually grow through that as you progress through your career. So basically those are the things, no.
Yes, that's true. No, you sometimes you make investment calls that don't pan out. So yeah, it's true that you have to be humble, and then you have to be able to use the knowledge that you have so that you can actually turn the tide when needed, even if you make a mistake uh, at times. Okay, how about Nicole? Would you like to share with us some of the skills that you think are very much valuable being a global equity fund manager?
Yeah, I echo everything that Basil has mentioned from investing in your education, continuous learning, and having the discipline and humility to accept things that happen or that unfold. So maybe I can talk about taking a step back and looking at courses that are important in college. So I come from a mathematical background. So I think having a good or strong foundation in mathematics and economics would really help you in making a framework or building a framework on how to understand what happens in the markets. So understanding how one economic factor affects another or how one economic variable correlates to another, that helps you make sense of potential outcomes in the market and help you position for it.
Okay, thanks for that, Nick. Don has a very interesting background, European studies and management of financial institutions. I guess
Yes.
management of financial institutions spot on. But maybe, how about European studies? What are some of the maybe learnings there, or even well, you've been around, no? You did ALM, financial institutional sales, and
Yes.
portfolio management, global markets. What are some of the key skills you think are needed to become successful in investments and finance world?
You know, if I'm going to pick anything up from my European studies course, it's really more on the critical thinking, liberal arts, right? So basically, that portion of my degree is liberal arts, and day in day out, what they will ask us to do back in college was to, okay, this is the material, you read on it, and I will not ask you what's and whens, I will ask you why, right? Put yourself in the shoes of who's speaking, what happened in that event, and tell us, okay, what have you been what was the reason and why this happened, and could you have done better, things like that. Okay, so that skill is very important as well in portfolio management. And if you're going to tie it up with accounting, maybe, no, I'm not an accountant. Although I want to take the CPA, no, the board exam, but I'm not an accountant. Nevertheless, if you guys are going to take the CFA charter, you'll see that financial reporting and analysis will take 40% of the exam, and it's no joke. And the reason why I say it's no joke is that it's really important for you to understand the numbers. If you're familiar with statistics, if you're familiar with the numbers, it's fine. Looking at the numbers, arranging the data, it's fine. It's a skill. But how do you read the story? How do you relay the story, right? If we're going to believe whatever companies will be posting publicly, then anybody can be a portfolio manager if those are all true, right? The job of CFA charter holders is actually to read the financial statements like a storybook, and basically, tell it before you make an investment decision. Read between the lines, read beyond the lines, and understand: am I doing the right investment decision for this for this stock, for example? No. So those are the things that can get you up to track to portfolio management. You mentioned I came from treasury. No, I was actually very afraid. No, no. I was a treasury practitioner. I was a trader and sales from 2010 to 2015, and my boss asked me, "Hey, I need somebody to head a department in trust, a portfolio management role. Can you do it?" He knows I was taking back then. I was still taking level 2, no. But what I can share is that when I took the CFA, it was like riding a bike. When I entered the trust banking group, when I did asset management, they just did a few introductory things, and I understood what they wanted to say, what the goals were, and I think the CFA charter was really the key for me to understand how it works, no. And like Basil, I'm not just saying it because I'm part of the panel. So yeah, there you go.
Okay, thanks for that. So let me chime in on that too, yung sa accounting, no? So I have an accounting background, and from my experience, what it did was it helped me pass level 1. But after that, true, as Don has said, no, it's not just about financial ratios or reading the financial statements, because it's just numbers, no. So you have to understand the story. So I fully agree with Don. That's to succeed in portfolio management. It's not just crunching numbers. You have to know the company or the asset that you are investing in. Okay, so let me ask this now. So parang interesting, no? So what's the best part of your job? What is it that you like about your job? I'm assuming you like your job. Okay. Maybe start with Nick. What's the best part of your job as a portfolio manager?
Yeah, since my focus is global, I get excited about knowing more about the bigger world out there. So it kind of broadens my perspective and not doesn't limit me to local themes. Also, in my role, I have more flexibility and creativity in implementing portfolio decisions just because the investable universe is wider. So I think some in the local space would have that as would think of it as a restriction. Now there are only this limited stocks or this limited sectors. But in the global space, there's so much more to learn and so much more to be excited about.
Okay. Um, how about Don?
Best part?
Yep.
I'd probably echo what Basil said a while ago. It's actually learning, no. What funny thing, after college, you'd probably think na hindi mo na ako mag-aaral for a while. But you'll see that actually it would add to your career na you keep learning, continuous learning. And for me, that's one of the best things to the best things of our job, no? And I think my colleagues here would agree that the industry is progressive enough that the seniors will be teaching a lot of stuff to the juniors, and the juniors having developments in the financial markets can also teach the seniors. It's a continuous learning for everybody, and I think that's the best part. You can bring that anywhere. All right.
Okay. I'll ask a different question to Basil. What's the challenging part of being a head of equity? What keeps you up awake at night?
Well, definitely there are a lot of things that keep me up awake at night now. Because I mean, if you're a fund manager, at the end of the day, it's very the numbers speak for themselves, literally, no. So you're always measured whether by your peers, by your superior, by your senior management, by your clients, no. You're always measured whether you're doing well against the benchmark or against the other banks, no. So that is a constant thing that keeps me up awake at night now, that challenge to outperform my peers and the benchmark. But I've learned to appreciate and accept that challenge. It's something that I look forward to, especially it's extremely rewarding if you're doing well, right? So if you're doing well against the benchmark, against your peers, the reward there is quite great, no, versus a challenge that's easy to attain, then easy to accomplish, then where's the reward in that if there's no challenge to that, right?
True, that's right. Okay, before we wrap up, let's try to address some of the questions in the chat room. So I'll read them and feel free to fire away and answer the question. Okay. Aside from getting the charter, what do you think are other certifications, skill set needed? So we covered that part, but this one is interesting. Does having a master's degree increase your chances of getting the job? I suppose a portfolio management job. So who wants to take that one?
So yeah, I'll take that one. You know, there are a lot of sister certifications. Can I call it sister certifications from CFA? No. There's the CIPM, there's CIA, there is a financial modeling, there's FRM. Marami, no. It actually depends on what portion of portfolio management you wanted to focus. No? Whether you want to be the one who's crunching the numbers, whether you're the one who's reading the numbers, whether you're the one making the investment decisions, whether you're the one who's going to talk about and selling it to clients, you have to know much about the things, right? So getting as much certifications as you can related to each other will not hurt you. And actually, those are the things that we are looking at. As part of senior management, I'm actually one of the guys who basically filter applications. And yes, master's degree is something that increases your chances of getting a job. But of course, a degree is a degree. We basically look at it and we ask you about it. But the thing is whether or not the skills were you able to get it? Were you able to practice it? Are you able to translate it to something that you can use or contribute or bring it to the table? Then that's a different story. Nevertheless, yes, other certifications and master's degree will definitely help you.
Okay, so that answers the question. Okay, here's another one. This is interesting to all the panelists. So, are you guys already looking at crypto to add into your portfolios? Is the local industry looking at DeFi already? So anyone can answer.
That's a tricky question.
Okay, maybe
Maybe
on an
Nick.
institutional level you can explain, right? So yung
Nick was
personal,
unmuting.
sige.
Maybe
Okay.
Nick has something to say. Yeah.
Yeah, so crypto has been a common theme lately in our team huddles. So we even have a joke that every time the word crypto is mentioned, we take a shot. But of course, we don't do that because we're at work. So anyway, it really is something that is already in our minds. Admittedly, it's not yet something that we are adding in our portfolios because it's still an evolving space. But definitely, it's something that's being discussed and being considered when we are looking at other parts of the market, how it correlates to global equities and etc.
Okay. Anything else to that?
Asset management kasi is a heavily regulated industry, you know. So then I'll answer it that way, no. We're asset management is regulated by the BSP. So as long as there is no regulatory framework that support new asset classes, then to answer your question, whether it's going to be added in the portfolios, definitely not yet. So it will the regulations will always come first. Whether or not there is a talks about adding it, I don't think I can answer that now in this venue. Okay.
Okay. Thanks for that, Don. That
Of
clarifies a
course.
lot.
Of course.
Okay. Okay, so here's one from the students. Where's the best place to start your journey towards being a portfolio manager after graduation? Huh? Did you guys start out as portfolio manager or analyst? So normally the way I observe it, it's some people come in as analysts and then they progress to becoming portfolio managers. Was it the same with you guys?
Yeah, I'll try to answer that. So,
Okay.
yeah, I mean, for me, no, definitely I didn't start out as a portfolio manager right away. I mean, if you're a fresh grad and somebody hands you $1 billion to manage, and that would be insane, right? So, definitely, if you look at my background, I actually started with the back office, no. If in DKS, I did the P&L for traders, no. So I did a lot of grunt work. That's a lot of like we handled the P&L for London traders. So that's like I had the mid shift working hours. Then from that back office work, I transitioned to an analyst, no. So I covered in MSC, I covered some global stocks, no. Then from global stocks, I moved to FMIC, which I covered domestic stocks, no. So yeah, definitely. I mean, for me, uh, you definitely it's gonna be hard for you to unless you're really a genius, no, or somebody who's gifted. No institution would immediately hire you as a fund manager. um, you have to learn to do the dirty work, the grunt work first. Lay the foundation. Start out as whether back office or an analyst. Lay down the foundation. Then and eventually transition. Prove to your superiors that you're capable and you know what you're doing. Then eventually you transition towards a fund manager role.
That's true. I'd second what Basil said. No, if you're fresh out of college, well, you know, back in college, I think even us, no, we were looking at management training programs within the institutions that we applied for, and I do believe that there are management training programs that are what do you call this? There's a I forgot the term, but basically streamlined for financial markets. Some institutions have it, so when you apply, you can ask the HRs whether or not they do have that management training programs. That's basically focusing on financial markets and portfolio management. Meron naman ng ganun, no? But yeah, don't expect that when you graduate, and don't expect when you graduate that management training program you will land a portfolio management job. You will have to prove yourself first. But whether it's an analyst, analyst experience, whether it's a back office experience, any kind of experience, as long as it added to your maturity, you can be considered to be.
That's true, no? So because the portfolio manager position is an investment makes investment decisions, so it's a fiduciary role. It's very important that one who's put in that position is already mature, as Don said, and seasoned. It actually knows what they are doing. So an analyst role will help you build the skills by understanding the market, the asset classes, and then as an analyst, what you can do is you actually help out in making the investment decision. So that's the first step once you graduate. Okay. Siguro, Nick, maybe this is for you. How and when did you realize that you want to be a portfolio manager?
Yeah, I think I touched on it a bit earlier.
Yeah.
I was preparing the report for these portfolio managers. So I kind of like was amazed at how they are able to generate alpha for their portfolios. And at the same time, I'm also thinking, how can I contribute more, or how can I influence bigger decisions in my career. So that's when I realized that I wanted to become one. So it's not really something that I dreamt of in the first place, but something that piqued my interest as my career progressed.
Okay. It's something that grew into you. Okay. This is an interesting question. Do you receive big bonuses if you were able to generate alpha return? Is
Well,
that a no? No. Okay.
I'll try
Go.
to answer that. No, I'll try to answer.
Okay, Basil, go ahead.
So yeah, I mean I've had ups and downs in my career na, no. So I've been doing this job for nearly a decade. So definitely you know, it's a incentive based work, no. So it's very objective. You have the numbers, you have, you know, you're ranked against your peers, ranked against your benchmark. That's the typical KRA or your typical measurements, no. So definitely if you for times when you we have certain metrics that we look at, how much do you outperform your benchmark, and in what quartile are you versus your peers, no. That's how we measure our KRA. So if you're for let's say in a certain period of time you're in the top quartile, then you also outperform your benchmark by X%, then definitely there's a commensurate incentive for that, no. It's very incentive based, but alternatively, of course, if you're not doing well, that the incentive is you shouldn't expect a huge incentive as well, right? So works at that's the contrary side to that. Yeah.
It actually depends on Basil, no, it actually depends on the institution you're going to belong to, no. Each institution will have a different set of compensation structure, so it's not uniform across the industry. So I guess it's more about managing your expectations when you're applying for a job. You have to make sure that you have that conversation. How do you get incentivized for a job well done, diba? What are the things for me to get that huge bonus that you're looking for, diba? And you know, we'll end it at that. Manage your expectations when you're applying to for a job, and make sure it's in line with what you have in mind.
Thank you very much for that candid answer from our panelists. I'm sure they appreciated that. Okay. We're down to our last 5 minutes, so maybe what we can do is, what advice can you give to someone in the audience right now who's a student and looking at maybe building a career in portfolio management, maybe starting out as an analyst? What can they do right now so that they are able to build slowly a career in investments or portfolio management?
Sige, I'll take a stab on that, no. So I guess first thing is, I kind of alluded to this earlier, no. Just, you know, constant curiosity, constant learning, no. I still read a lot of books, no, up to this day, no. Not necessarily related to finance, no. It could be other topics, no. You can't just be all about finance, no. You have to be well rounded, not only working towards finance. I guess one thing I would recommend for people, and especially if you're a college student, you know, I guess you can start opening your own trading account. That's the way you can start. Now, start with a small trading account. You know, save a little bit of your allowance every day. Then you can start trading. You know, and reading research reports. Now, almost all brokerage houses offer research reports now. You know, start reading research reports. Start reading the news. That's the way you get your foot, get the experience, just the taste of how to make money, how to lose money. That's how you experience that. And eventually, you never stop learning. That's it. You keep on learning, keep on growing, keep on reading. If you're really dedicated to this type of work, then it won't feel tiring. I mean, for me, it's really enjoyable. I love reading, because there's always something new.
I'll add to that, no. with the sabi ni Basil kanina, there was the industry is small, right? So definitely there will be a lot of applications. And yes, the CFA charter will put you up there. But if you're looking really for a career in portfolio management, make sure to equip yourselves with added value. At the end of the day, whichever institution you're joining in, it's all about getting the clients, making them happy, and earning from it, right? So at the end of the day, that's the objective. So each person, whether you're back, middle, or front, in terms of what your function is, everybody has a sales function, right? So for me, to be honest, if I'm hiring somebody for my portfolio management team, I'll look for that somebody who does know the numbers, who can read the numbers, but the added value. I mean, how do I choose between the 5 people who can do the same skill? It's really the soft skills, right? Soft skills. How do you make a pitch? Can you make that pitch? Can you present to the client? Can you make the client feel good about a bad market? Things like that, right? Can you make the client add more money if you perform well? Because I've heard some portfolio managers who spoke and presented to clients, and at the end of the day, the clients were a bit unhappy because they didn't understand how what the story was, right? So for me, that added value, equip yourselves with that. Expect that having that sales function will be innate in you, whether you're doing portfolio management, whether you're doing an analyst job, whether you're doing research, credit, or back office. It's all there. So that will be my career advice for everyone.
Maybe just to add, no. So since we have a lot of students out here, I think that it's really good to have a strong foundation on the basics. So right now we are in the age of automation, and there's kind of a tendency to skip steps and just copy a code that you see online when you're programming, things like that. So I think what I can add is that you should know your basics. You should have a strong foundation, understand the step by step what happens in a function in a program that you're creating, so that you understand how things work, how to troubleshoot when something doesn't work, and be able to produce a more meaningful outcome.
Okay, thank you very much. Those were sound advices. So you have to continue learning, you have to add value, and of course, you have to know the basics. Okay, so that sums it up for today for the portfolio management session. For the questions that we weren't able to read out, please feel free to reach us and ask it, and we'll try to make sure that we can get back to you on it. Okay, so that concludes our session. DJ?
Hello, hello, hello. Thank you, Karen, and thank you, Jason, Don, and Nick. Thank you for all your insights. And as a token of appreciation, we present to you the e-certificates from the CFA Society. So we'll just read a sample one for uh, Basil. So the CFA Society Philippines presents the certificate of recognition to Mr. Basil Jason Go for his valuable contribution as speaker on the topic of Portfolio Manager's Career Track at the Philippine Junior Finance and Investment Summit 2021, The Future Starts Now, given this 10th of November 2021, signed by Dr. Rob Ramos, the president of the CFA Society. And we would also want to recognize Mr. Don Hernandez, CFA, as a speaker for the Portfolio Manager's Career Track, also signed by Dr. Rob Ramos. We'd want to also recognize Ms. Nicole San Juan, CFA, as a speaker for the Portfolio Manager's Career Track, also signed by Dr. Rob Ramos. And finally, to Ms. Karen Jonas. Wala pa yung, there you go. Ms. Karen Jonas, CFA, as the moderator of this session for the Portfolio Manager's Career Track, also signed by Dr. Rob Ramos, President of the CFA. So let's have a quick photo op. Our sincerest appreciation for your time and effort for being here today. All right. So let's just have a screenshot. So our back end will take a screenshot. Please smile, everyone. Okay. All right. So thank you for everyone, and God bless. Keep safe to our panelists. And we'll have a short 10-minute break If you haven't downloaded and installed the CFA Society Philippines mobile app, please do so now. For your questions, please see the prepared list of frequently asked questions available also in the app. And if you want to post about PJFIS, don't forget the hashtags hashtag PJFIS 2021, hashtag the future starts now, and hashtag CFA Society Philippines, whether you're posting it in Facebook, Instagram, LinkedIn, or other social media. As a reminder, the evaluation form is also available in the CFA Society Philippines mobile app. And we have an evaluation form for each day of the PJFIS. This is part of your requirement for you to get an e-certificate. And you should attend at least 70% of the whole summit or at least 13 sessions to get an e-certificate. Okay. So we'll have a 10-minute break. See you all.
Why choose the CFA?
How has being a charter holder helped my career?
The confidence that it's given me in my own analytical ability.
Being a charter holder has broadened my perspective.
My understanding of the industry is much better than before.
You gain a broad understanding of a lot of different subjects.
And it's made me more confident in the work I do.
Instant credibility from my peers.
I can go to a different country. I will meet people who have the same qualification, who understand what I've done to achieve it.
It's a global program, so you can speak to someone who's a charter holder from India or from South Africa, and they understand you.
It feels good to know that it's quite valuable for employers in the industry.
My belief that I can achieve anything.
So I think being a CFA charter holder helps me to communicate with my clients in a language they understand.
The CFA gave me a lot of information that I had not learned during my economics degree.
The amount of knowledge which you get is so diverse.
Something I didn't know when I started the program was how important the ethics portion was. I realize now that it really sets the standard in the industry in terms of practices.
I can speak the same language with hundreds of thousands of investment professionals.
A deep knowledge, understanding of the financial market.
It is wanting to know how all the pieces fit together.
Because it really does open a lot of doors within the financial industry.
I learned to be patient, focused, dedicated.
So when you get those letters after your name, it's a pretty good feeling.
Having the CFA on my name card gave me a huge advantage, especially as a woman, because when I walk into the room, he immediately knows you mean business.
It's not an easy process,
but nothing's impossible.
It was a lot of sacrifice, but it's worth it.
I felt that I did a very, very big achievement.
And it made me feel proud.
I'm very, very, very proud.
I'm very proud of the achievement.
I'm very proud to be a CFA charter holder.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep you abreast of financial innovations here and abroad.
Be known for our integrity and professional excellence.
Let's always put investors' needs above our own. Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests come first.
Markets function at their best and economies grow.
For the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu.
Erwin Ocampo Avante.
Rob Ramos.
Sandra Aurelio Gonzalez.
Mark Ilaw.
Kate Burgos, and I am CFA Charter.
We measure
up. Join us. Let's measure up.
Welcome back, everyone. We are now down to the last session of the day, but before that, we would like to take this opportunity to thank our sponsors, event partners, and media partners. PJFIS 2021 sponsors and partners. Our platinum sponsor is MSCI Philippines. Our gold sponsors are AP Securities Incorporated, Call Financial Group. There's our gold sponsors. Our silver sponsors are Atram Trust Corporation, DBP Daiwa Capital Markets Philippines, and Papa Securities Corporation. Our media partners are Business World Publishing Corp and Business Mirror, and our event partners are Bureau of the Treasury, the Philippine Stock Exchange Incorporated, and Securities and Exchange Commission. So welcome back, everyone. I hope that you had a good break. So to be an effective portfolio manager, we really need to understand how to construct portfolios that are optimal to our clients' needs. In the next session, titled Constructing the Client Portfolio, our next speaker, Mr. Jan Reyes Santos, CFA, will give us an overview of the elements that need to be considered in portfolio construction. Mr. Santos is the Vice President and Head of Institutional Fixed Income, Fund Management, and BDO Trust and Investment Group, the largest trust organization in the Philippines. He was one of the most astute local currency bond investors in the Philippines, according to the Magazine for 2012 and 2013, and was cited as one of the best local currency bond individuals in 2017. Mr. Santos is a CFA charter holder, holds the Chartered Alternative Investment Analyst designation, or KAYA, and as a CIPM certificate. He earned his Bachelor of Science in Applied Economics and Bachelor of Science in Commerce major in Management of Financial Institutions from De La Salle University in 2006. He has been in the banking and asset management industry for over 14 years. Let's give a virtual round of applause for Mr. Jan Reyes Santos, CFA.
Hi. Good afternoon, DJ. Thank you very much. Am I coming in clear?
Yes, you are coming in clear. How are you, Mr. Reyes?
I'm good. How are you?
Doing fine. I hope that all our participants have learned from the last session, and hopefully will learn from your session as well. And to moderate, yes, sir, go.
Yeah, go ahead.
And to moderate the Q&A part of the session, may we also please call on Mr. Edward Hernandez, CFA, PJFIS 2021 Core Committee member at CFA Society Philippines. Mr. Edward Hernandez, is your video here?
Yep. Hi, Ed. How are you?
Hi, Ed.
I think you're on mute, Ed.
There. Sorry.
There you go.
Had a technical problem. Hi, DJ. Hi, Bryce. Yes. Thank you for having me. I look forward to our Q&A session later. Let's have a fruitful discussion on the topic.
Me as well.
The floor is yours, Mr. Fernandez, and also Mr. Santos.
Okay. So do I share my screen, right? I'm gonna share this. So can you see my slides? I'm assuming you can see my presentation right now. A crazy thing happened actually. I was preparing for this afternoon's lecture, and my internet at home broke down. So I'm currently outside of my place, and I'm at a cafe near where I live. And I thank you very much all the staff here in Y Cafe. They've been very friendly and very supportive. So I apologize in advance if things don't go as well or as smoothly as I want them to be. But I thank you very much. I mean, being able to speak in front of all the youth who were attending this Philippine Junior Finance Investment Summit. So how do we call them? PJ FIS, right? It's an honor and definitely a blessing to be able to share with you my knowledge and what I've learned so far in terms of investment management and portfolio management. So our lecture or our topic for this afternoon is about constructing the client portfolio. I just want everyone to put on their portfolio managers hats. I know a while ago you were listening to our friends in the industry who were handling different portfolios as well in different banks and different asset management companies. And I'm pretty sure you learned a lot from them. But let's try to, assume that this is your first day in the job and your boss asks you to construct a portfolio. So consider this portion of today's seminar sort of like a phone a friend. And I'm the friend that you unfortunately called and you're seeking my advice. And here I am right now trying to give you inputs on how to construct a portfolio. All right. So bear with me if there are any difficulties. I mean, technical difficulties, but I'll do my best. So to start it off, I think let me start with a quote from one of the most famous leaders in history, Winston Churchill. I came upon this quote in his biography, and it says he was asked what desirable qualities of a politician is. And he said that it's the ability to foretell what is going to happen tomorrow, next week, next month, and next year, and to explain why it didn't happen. So for me, when I was reading this, it struck me that these are also the same qualities that are desirable for a successful portfolio manager. I mean, for me to be able to foretell what's going to happen is definitely something that I want to possess. But at the same time, I'm not going to be right all the time. So I have to be able to explain to my clients and manage their expectations and satisfy their discontent and explain to them why it didn't happen. So always keep in mind that portfolio management is a relationship. All right. So it's a relationship between us, the portfolio managers, and the clients that we are trying to service. All right. So portfolio management touches on a wide array of topics. There's trading, there's analysis, there's client relationship handling. So I'm gonna try to touch on the pertinent ideas right now in this session, and try to build on those concepts and relate them to how to construct an efficient portfolio for our clients. All right. So the first thing that's very important is that you have to treat each investment in the context of the portfolio, not just one investment alone. I mean, there are different assets and different asset classes out there, but you want to always consider buying or including them in your portfolio in line with the other assets that you hold. So in that sense, you always have to be aware of the portfolio approach in investing. And, similar to collecting assets and asset classes, you want to be able to collect them or treat them as important gems in your life. And I was thinking about this when I was trying to construct this lecture. And I couldn't think of anything or the best way to share with you these concepts without boring you out, trying to hold your attention. So all I thought of was the most valuable gems out there would definitely hold anyone's attention. And if I ask you right now what those most valuable gems are, it's definitely not gold. It's definitely not silver or not rubies. It's definitely the infinity stones, right? If you're not aware of the infinity stones or you're not familiar with these gems, I suggest that you put down your CFA books for now and start reading on and watching the Marvel Cinematic Universe. All right, these are definitely valuable. It's earned the Walt Disney and Marvel billions of dollars, and all we know about them is that they are 6 stones, different colors, and they have different powers. Right? They even have their own movies or where they started showing up. And this afternoon, I'll try to relate all of these gems in terms of the gems that we will be using in constructing the portfolio. So our topic this afternoon is constructing the client portfolio. I want to approach that in reverse. All right. So I want to address what a portfolio is, and then we'll tackle what the client is and how to construct a proper portfolio for them. And then since the topic or the theme for this year's PJ FIS or the PJ FIS is the future starts now. I want to touch briefly on what the future of asset management in my eyes and in what I think it could be, how it should be or how it could be shaped by you young folks out there. All right. So let's start. Uh, Okay, so a portfolio, the simple definition in finance, it's the investments that are owned by a person or an organization, right? Uh, it's basically a collection of financial investments designed to meet an objective driven by the desire for returns or tolerance for risk of a client. So two things comes to mind. The key concept in portfolio management definitely is diversification, since it's a collection of assets. You don't want to be holding the same assets that have the same behavior depending on how the economy or how the markets move. So you want to diversify that. And what I mean by diversifying is by not putting all your eggs in one basket. You definitely don't want to be concentrated in one specific risk, such that when something bad happens, you get wiped out. And diversification basically addresses your risk of ruin, right? You want to minimize your risk of ruin as much as possible by investing in the different spaces that would react differently. Second, portfolio investment may either be strategic or tactical. Basically, this pertains to the timing or the time horizon that you design your portfolio, right? So when you say strategic, you have the intention of holding these assets for a longer period of time, whereas when it's tactical, you're actively buying and selling securities or assets in the hope of achieving short-term gains. What I want to highlight as well in here is that your portfolio will not be consistent or constant throughout time. When I started investing, my portfolio back then definitely is not similar to the portfolio I hold right now. I mean, I was younger, I didn't have much to save, I didn't have much to invest. So the assets that I was holding was relatively few, and my ability to invest back then was relatively weak compared to now. All right. So yeah. Since you're aware of spacing investments and you're aware of timing your purchases, I want to address what I mean by a collection of asset classes. All right. So when you say asset classes, these are categories of securities or investments that have the similar characteristics or attributes and risk return relationships, right? It's very important that you group them accordingly, similar to how you separate or segregate your laundry between the whites and the coloreds. You want to ensure that your asset classes are split between those that behave similarly and those that have the same return aspects and risk prospects. And if not, you definitely experience problems and trouble, and you have frustration in terms of analyzing them and your expectations of how they would move and how they would relate to the changes in the market would definitely be distorted if you don't have the correct groupings in terms of asset classes. Now, traditionally or historically, there's always been three main asset classes, which is stocks, equities, fixed income or bonds, and cash equivalent or money market instruments. Currently, some of the investment professionals or most investments professionals actually include alternative investments. So these include real estate, commodities, futures. A while ago, I heard someone ask about Bitcoin and the like. So these are cryptocurrencies. These are all types of alternative investments that have been gaining traction in present days. And for me personally, I think the reason for that is that currently the relationships between these traditional asset classes have been changing. I don't want to say breaking down. It's really more of they've changed from what we've expected them or how they used to behave like 20 years ago to how they are behaving right now. Because in reality, the investment industry and the asset management industry is definitely changing. All right. Okay. So knowing those asset classes, your next question then is, why would I include it in my portfolio? Or why would you include it in your portfolio? So three reasons come to mind. First is growth, second is income, and preservation. When I talk about growth, this is all about capital appreciation, right? So you want to be able to buy something and sell it at a higher price. And that in itself grows the capital or grows the principal that you invest in that security. The tricky part here though is that capital gains is not predetermined. You're not 100% sure that you'll be able to sell a certain security at a gain in the future. And sometimes you even experience losses. So that in itself makes an investment risky. And by being risky, there has to be an ample reward for investors to take on that risk. And that's where your risk premiums come in. So when you buy securities for growth investments, what you want to do is you want to analyze them properly and make sure that the risk that you're taking for your portfolio or for your client's portfolio will be rewarded. Second, a reason to include it in your portfolio would be for income. Income would be most easily represented by bonds. These are the predetermined cash flows that you get from your investments. And with bonds, you already know the coupon payments that you will be receiving for the period. And you also know when you will be receiving the principal upon maturity. So that predetermined knowledge in itself makes the investment less risky because you already know what to expect. And because it's less risky, the returns most of the time is not as significant, or it's less compared to your growth assets, right? And then lastly, preservation. It's all about maintaining the value of your principal. And when you try to maintain the value of something, it has to be analyzed whether it's in terms of nominal terms or in real terms. Because definitely we all know that inflation deteriorates or depletes the value of your principal over time if you don't earn enough out of it. So you want to be able to preserve investments, the value of your investments, either in nominal terms or in real terms. All right. Okay, so a brief recap. I think that has been a lot, but I want to keep this simple, and I'm trying to hold your attention as much as possible as I can. But two key takeaways is that what you want to aim for is you want to space out or diversify your holdings in a portfolio, and secondly, be aware of your timing or your time horizon, and make sure that you are able to use the following space gems and time gem to achieve those goals. So when you space out your holdings, you ensure that the portfolio is diversified and that the portfolio should be able to stand the test of time, and it should also account for the time horizon and adapt accordingly. All right. So two things to keep in mind. Secondly, we go to the client. All right. Quick definition is a client is any person or an organization using the services of a lawyer, or in this term, a professional or investment professional for a person or a company. Okay. In this context, an investment client is any person or entity whom we as investment managers enter into a contract to perform discretionary management services for them. So as I mentioned a while ago, portfolio management or investment management is a relationship between the client and the investment manager. So these clients trust us to be prudent with our decisions and to act accordingly, and that all our actions would have them as a priority. All right. So that's our duty of loyalty to the clients. And the first step to fulfilling that duty is you have to determine who your client is, because most of the time, like for myself, I'm a fund manager with BDO Trust, and me and my team handle some of the largest portfolios in the country, right? But most of the time, we don't deal directly with the ultimate beneficiaries of the portfolios that we manage, because we manage a wide array of investment portfolios. These include retirement funds, insurance companies, schools, and sometimes high net worth clients. And most of the time, we talk to the representatives of these portfolios. And the problem there is that when you talk to the representatives, they might have their own agendas or their own interests, which can not be aligned with the interests of the ultimate beneficiaries. So similar to going into a relationship with anyone, right? You want to be sure that you're going to a relationship with the right person, or you're doing the stuff or the things that you're trying to do to please the right person, the ultimate beneficiary of that relationship. In this context, the client is the ultimate beneficiary of the portfolios that we are trying to manage. All right. So these clients have guidelines in their minds and how they expect us to manage their portfolios, and how we will be taking care of their assets. And at the same time, we have to be able to empower them and give them the capacity to set those guidelines and be in line with their wishes and aversions. They have to be able to communicate with us and to bond with us and to tell us what they want, and have them exercise that power. But at the same time, we have a responsibility to educate them, right? We need to be able to guide them, because we are the experts, we are the professionals in that relationship, the dynamics of that relationship. Uh, so having all these established, having an open relationship with your client, and then having all the guidelines set, the most important part of portfolio management, or where to begin in portfolio construction, is the investment policy statement. All right. So after determining the appropriate, to be able to determine the appropriate asset mix, uh, the desires and the priorities of the client has to be clearly articulated, and it has to be contained in a contract, or a document, such that it will allow both parties, ourselves and the clients, to revert to that contract whenever we feel that things may not be following our expectations. All right. So that is the investment policy statement, or the IPS, and it's the starting point of the portfolio management process. You have to make sure that the IPS is set before you start building or constructing portfolios for your client. Otherwise, you might end up disappointing them because you're not constructing the portfolio to their liking. So the IPS essentially communicates a plan how to achieve investment success. It involves fact finding. It involves getting to know your client, getting to know their dreams, and getting to know all their assets. So a typical question that I get from friends, or people who find out that I'm in the investment in the management industry is, Bryce, saan ba okay mag-invest, or where do I invest? And it's a simple question, but it's a really tricky question to answer, because I can't give them a one-off solution. I always have that portfolio approach in investing in my mind. So the way I answer that question is, I ask them about personal stuff, like what their dreams are, what their risk aversions are, how much total assets they have. And when I ask that, they immediately back off and and feel disappointed I start asking personal questions. But that's the dynamics of this relationship in terms of constructing portfolios for clients. You have to be personal with them, because we are working in a trust arrangement, and they have to be able to trust us, and believe that we have their best interests in mind. All right. So an IPS, in terms of the IPS, a successful IPS, or a success in terms of the portfolio management, is by able to attain the portfolio that is structured to uh, to address the client's objectives and desires. So the performance is secondary, actually. If you look at the big picture, the performance of your portfolio could be considered secondary. The main priority is that the portfolio is well constructed along the lines of what the client wants and what the client should have in their portfolio. All right. So your IPS should be specified in terms of the return objectives and the risk objectives of the clients. All right. So when I talk about return objectives, it could either be on an absolute basis or on a relative basis. When I talk about absolute basis, I'm talking about a specific particular rate of return. So in my job, I have clients who have targets in terms of how much they want to earn on a specific period, or how much I should be able to deliver. These are clients that have targets, either it's a personal bias or it's a regulatory mandate, or it's something that will allow them to break even with their expenses. But at the end of the day, my performance will be measured whether or not I was able to attain that absolute rate of return that they specified. And secondly, when you talk about relative basis, right? When you invest, you try to capture the systematic risk of the different assets out there. And that's basically talking about the different asset classes or the different universe groups in the investment universe. And these are represented by different benchmarks. All right. So for the Philippine Stock Exchange, you have the PSE index. And most of the time, in order to assess whether or not we are good portfolio managers, is the client would specify a benchmark in advance and measure our performance relative to the performance of that benchmark, and whether or not we were able to position properly or buy and sell securities at a very opportunistic levels in such a way that we will be delivering performance better than had they bought the index. So that's a relative basis in terms of return objectives. Now, the tricky part here is that you have to ensure that these objectives set in terms of their return targets are realistic and it's consistent with the risk mandates that they have. You know what I mean? So a conservative client should not and could not demand for exorbitant returns, primarily because, as I mentioned a while ago, predetermined income investments are less risky and hence they offer less rewards. And on the other hand, the capital markets, gone are the days that you could earn more than double digit on an annual basis from a bond. In the Philippines, it was possible like maybe 20 years ago, but nowadays it's significantly hard, and I think it's impossible, not just in the Philippines but globally. I think. Correct me if I'm wrong there, but definitely these bonds that offer double-digit returns are something that you won't really consider for your portfolio. Either they're too risky or they're in risk of default. So bottom line is you have to be able to manage the expectations of the clients relative to how the markets are performing. All right. So with regard to risk objectives, you want to specify the portfolio such that it reflects the risk tolerance of the client. And when you talk about risk tolerance, it's a function basically of the ability of the client to carry risk and their willingness to take on risk. So when I talk about ability to bear risk, it's more of the objective factors that we're talking about here. So we're talking about the specific measures of risk. So either it's standard deviation or variance or other factors that are used in the industry, and you relate that with their portfolio. So obviously, a larger portfolio, 100 million pesos worth, has more ability to bear risk compared to a portfolio that's worth 100,000, right? So that's how you look at it. In terms of willingness to take risk, these will be more subjective with regard to how much a client would like to expose themselves, whether it's driven by psychology or their circumstances or past experiences. You have to be able to discern that and sit down with the client and discuss that, because most of the time, the ability and the willingness of a client to bear risk is not aligned. So there are folks who are rich or have a sizable portfolio, but their willingness to take on risky bets is minimal. So they end up being too conservative in such a way that they don't optimize the returns of their portfolio. On the other hand, on the other side of the spectrum, there are also clients who are so gung ho with regard to the investments that they want, but their ability to take on risk is not as material compared to an affluent investor. So we have to manage their expectations and guide them accordingly. So pardon me, let me just take a quick sip of drink. All right. Now, you also want to list the constraints in the investment policy statement. So the constraints basically are the guidelines that would hold us or limit us in terms of the actions, because we have to be mindful of the requirements of the clients. So in particular, there are various constraints. The most popular are these 5 liquidity constraints relate to how much liquid or cash the client intends to withdraw from the portfolio. Time horizon accounts for uh, the time that the client will be willing to hold their portfolio, or the time that they have before they want to liquidate significant portions of the portfolio. Regulatory requirements refer to the regulators that they have to appease and they have to follow, whether it be the insurance commissions or the BSP or etc. etc. Tax concerns most definitely affect a lot of people, but in my experience, it's primarily the retirement funds who want to take advantage of their tax, their benefit to be tax free in terms of their returns in their investments. So you want to take that uh, that constraint and be wary of the investments that you buy for the portfolio and take into account their concerns. All right. And lastly, the unique needs of clients. Some clients have personal objections in terms of the investments that we include in their portfolios. So whether it's because a certain company is their competitor, or they have past experiences with this investment that they don't want it anymore, or they have ESG requirements, meaning they're more socially responsible with regard to their investing, we have to take into account those requirements by the clients. Since it's a relationship between us and them, we want them to make them feel that we listen to them and we respect their decisions. All right. So capital market expectations, as I mentioned a while ago, this is the avenue where you try to educate your client and you try to develop or foster that relationship with them. You try to tell them what's happening with the market right now and what they should expect of with regard to the returns that they would be getting, and what the concerns with regard to the risk and returns, and whether or not their expectations are realistic. All right. So there are different technical stuff that I put down in this slide, but traditionally, capital market expectations are stated in terms of return expectations and risk expectations, and there are different ways to measure that. I don't want to give your teachers ample ammunition to ask you if they'll be using this as part of their exam, but definitely you can research this. But in practice, there are different ways how to translate this or how to communicate these expectations and how to best signify them so that your clients would appreciate them. All right. So quick recap with regard to a client. I said the first step is to identify who your client is, and you have to be able to discern what they have in mind, and you have to give them the power to be able to invest in how to carry out those guidelines in terms of the relationship, because the client hopes to enhance their position in life, right, with their portfolio, and it's up to us to make that possible. We have to give them the power, and we focus our energy and our strengths so that their wishes become are achievable, and they can also protect their goals in life, similar to what the mind gem and the power gem does. All right. So the last portion is constructing. It's basically building or erecting something, an idea, or it's the physical construction. In this context, what I mean by that is it's a process of understanding the different asset classes and how the weightings of these investments affect the performance and risk, and how the decisions in terms of allocating in these various asset classes ladder up to attain the investor's objectives. So, constructing a portfolio is basically the embodiment of the client's investment profile. It involves allocation of the resources on the different asset classes that we think would be beneficial for them. All right. So, this portion of the investment management process will create that portfolio for them and turn those wishes that they have previously into reality. It's the soul of portfolio management as well. As you carry out the major decisions made by both you and the client when you designed the investment policy statement. All right. So talking about allocating assets, there are two ways to do that. And one is the strategic asset allocation and tactical asset allocation. What I mean by these is that a strategic asset allocation is more for the long term, and you want to capture the returns of a specific asset class, and you're expecting that holding this asset class would achieve the expected returns in the long run. But at the same time, asset prices do not move in a straight line, right? So you want to be able to take advantage of those volatilities in the market. And that's where tactical asset allocation comes into play. It's the deliberate decision to deviate from your strategic asset allocation, and you'll be able to add value to the portfolio by taking advantage of these volatilities in the market. I want to touch very briefly on the common portfolio constructing methodologies. There are three that's common that I've came across upon in my experience, with regard to designing different portfolios for clients. So these are the typical ways that methods that we apply. So first is the fixed weight. So this is the more traditional methodology when you assign specific weights for your portfolio. Is similar to like designing a strategic asset allocation and tactical asset allocation. A key concept though I want to elaborate is rebalancing, right? Because as I mentioned a while ago, fluctuations in the market value of your assets do happen from time to time. And you will be forced to rebalance because sometimes your one asset appreciates so much that it exposes that the risk exposure of your portfolio becomes too concentrated, and you want to take advantage and rebalance accordingly. At the same time, if the value of an asset class drops significantly, then you also want to rebalance because maybe it's time to address your risk exposures. So for a fixed weight portfolio construction methodology, these rebalancing requirements or the timing for rebalancing is more manageable and more flexible, because you can either be disciplined by it by imposing a periodic rebalancing, or you can take your time and as a portfolio manager choose not to rebalance as often, because maybe the prices or the values of the asset classes that you invest in will run up depending on the trend. And you also have to take into account the costs of rebalancing, because nothing is free in the market, right? There's no such thing as a free lunch in terms of investments. And secondly, risk-driven portfolio construction methodology. This is more focused in terms of the risk exposures of the portfolio. So there are two ways to do that: risk outcome oriented and risk allocation oriented. When you talk about risk outcome oriented, you want to minimize the risk or maximize the diversification of the assets that you hold. You're more focused on how much risk exposure you have. in terms of your portfolio. In terms of risk allocation, you're working with the budget, risk budget, wherein you try to maximize the allotted exposure or allotted weight for asset class depending on what budget you have. And or sometimes you also want to them to be just equal in terms of a risk parity portfolio. All right. And lastly, our return driven portfolio constructing methodology is more focused on the returns, obviously, right? So some portfolios try to increase the exposure into a specific asset class depending on whether or not it's trending, or you can call it a momentum oriented portfolio. But basically, what you want to do here is you want to maximize uh, or optimize the portfolio using mean variance optimization. This is a key concept in the modern portfolio theory. Basically, what you want is to invest in asset class, maximize the combination of the asset classes that you invest in such a way that it will give you the highest return for the unit of risk that you take on for your portfolio. Now, the thing here is that rebalancing will be typically more frequent compared to the fixed weight approach, because as markets move, you know, and especially on volatile markets, then you will have to rebalance your portfolio exposures accordingly. Okay, so brief recap: what is constructing? It's the embodiment of the the client's investment profile, and you want to help the client create that portfolio, turn their wishes into reality. And you also want to carry out portfolio construction because it is the soul of portfolio management as you carry out the major decisions with regard to the reality gem and the gold gem. All right. So when your portfolio is well constructed, you're able to allow the client to fulfill their objectives. And that means they are comfortable with the risk that they take on and the goals that they set for themselves. Also, it portfolio construction gives them the control and to take advantage of the opportunities in order for them to attain what used to be impossible through portfolio management. So that's basically constructing the Infinity Gauntlet for you. All right. I hope you watch the movies that come in the that relate to these infinity gems, and keep these concepts that I discussed a while ago in mind when you see those stones in those movies. All right. Lastly, in terms of the future of portfolio construction, now I don't want to dwell too much on each of these bullet points or each of these topics, but instead I want to share with you some of my philosophy in terms of the future for portfolio construction. Because personally, I think previously portfolio management or investment management is a very prestigious service that's focused on the affluent. But as technology change and the modern times that has come upon us, the masses and young people have gathered that knowledge and gathered those resources that made them aware of the importance of portfolio management and constructing a portfolio for them, designed for them. All right. So you would notice these concepts pop up in the industry, like and what I want you to keep in mind is that years ago or historically, these are not possible. You know what I mean? It would take plenty of labor capital just to be able to carry out most of these actions. But because of the advent of technology, we are able to increase retail investing access. Take, for example, the numerous platforms that allow us to invest in the stock market and even in alternative assets, right? If you know this guy, the meme guy, this is Mr. Stonks, right? Who here doesn't know about GameStop and the Reddit investors? Another concept of the future of portfolio construction is robo advisory, you know, because of the low cost or cheap, efficient system that allows these robo advisory firms to thrive. They actually give access to retail investors or those that are just starting to invest and allow them to have a diversified portfolio. And there are also thematic drivers, ESG, for example, or tech oriented investing, or healthcare oriented investing, or ETFs that allow them access to these, or cryptocurrencies. But basically, these all allow a wide array of investors, or they opened up the industry to everyone. And that is all because of the advent of technology. And also there's text analytics and natural language processing. It is very big because of the capacity of our computers to process data. They are able to find patterns that allow them to do the analysis efficiently and very effectively. And this basically allows the different firms to engage in an information arms race, wherein they try to employ as many data scientists or as many data engineers that would process these chunks of information for them. So, in sum, just 3 takeaways that I hope you get after this lecture, or after this portion of today. First, the IPS is very important. It's the starting point for the portfolio management process. You don't want to start constructing portfolios without the IPS, right? You want to fully understand the client situation, their requirements, and that will allow you to gain successful results. Secondly, the risk tolerance of the client. It's you have to account for their ability to take on risk and their willingness to accept risk before you label them or box them, whether they're conservative or they're aggressive, right? And lastly, regardless of the portfolio construction approach that you apply, it's basically being able to get the right mix of assets that will drive your key factor for success. All right. So yeah, that's it for me. Thank you very much.
Thank you, Bryce. Thank you for your presentation. And I am a fan also of the Infinity War saga. So to our attendees, will you become a Thanos or will you become an Iron Man when it comes to portfolio management? Well, it's you to decide. Well, let's call on Ed to moderate the Q&A for this session.
Hi, thank you, DJ. Thank you, Bryce. I remember what you said kanina na sometimes you get, when you work in the financial industry, sometimes you get questions from your relatives. Like, saan ako pwede mag-invest? And
Yeah.
when we encounter that kind of question, that's actually not an easy question to answer, since we have to consider their personal situation. Okay, guys. So if you have questions for Mr. Bryce, you can type them in the chat box. And maybe we have time for 1 or 2 questions. Okay, we have questions right here. So, okay. So we have one question here from Joshua. As a portfolio manager, what do you normally do when you are faced with unexpected risks or black swans?
All right. Wait, am I coming in?
Yes.
Can you hear me? All right.
Yeah.
So we recently experienced a black swan, right? If you think about the COVID pandemic back in March, for me, I think that was sort of a black swan. Asset prices fell significantly in a span of like 3 days. I remember I was in the trading room and I was talking to a seasoned equity fund manager, and I was pointing out, hey, another 50% drop from where we closed 3 days ago. Do you think it's the bottom? And the tricky part is that not a lot of people are able to call it the bottom, especially when it's a black swan event, right? It takes a lot of guts, a lot of courage to position against the market, especially when fear is everywhere, when fear is abound. So the most important or critical factor for me as a portfolio manager is that when events like this happen, you want to make sure that you have dry powder to deploy. And how do you ensure that you always have the right powder to deploy? It's by ensuring that your risk of ruin is manageable. Otherwise, if your positions are incorrect and a black swan event happens, then there's a high risk that you get wiped out, right? Now, let's assume that you have flexibility in your portfolio, you have dry powder in your portfolio, and then a black swan happens. Uh, you won't be able to call it a black swan, but you'll have this feeling that when you look at the weights or the exposures of your portfolio, that you've deviated significantly from what you've set as your strategic uh, exposures. So it's that discipline to be able to be cognizant and tell yourself that, hey, maybe it's time for me to rebalance my portfolio, right? Imagine if you rebalance your portfolio back in March or April of last year, even when you lost significantly in the equities market and you bought into that dip, you'd be effectively buying the Philippine Stock Exchange at less than 5,000 levels. And if you have access to global investing, you'd be buying the S&P index at a significant discount. So it's that discipline and that ability to be cognizant, to manage your risks and be ready and be aware to, hey, maybe I should be rebalancing right now and take on that. Basically, a short answer to that one, and not at the risk of sounding too philosophical, is just to know yourself, right? And manage yourself and control yourself accordingly in all these types of situations.
Mm-hmm, mm-hmm. Okay. Yeah, that's actually a nice answer, no? And I remember a quote, no, from Warren Buffett, and he said that calling the bottom of the market is like catching falling knives.
Mm. Yeah.
Yeah, you have to manage the risk there. Okay, so we have another question, no? Siguro this is the last question that we can accommodate for this afternoon. As a portfolio manager, how do you deal with fearful clients, especially when you see that their portfolio is underperforming relative to the target that they set? Like when they're being too conservative with regards to their actual return target.
Gotcha. All right. So as a portfolio manager, it's our responsibility to foster, take care of that relationship with our client. And you have to remind them that the relationship will not expire because of 1 year's worth of underperformance. So most of the time, it's all about broadening the perspective of your client, whether it be through educating them of how the markets perform during the period, or showing them that a wider perspective or a longer time horizon, and pointing out that, hey, maybe we underperformed this year, but if you consider the 3-year performance or the 5-year performance, we're still better off, or there might be even a chance that we're beating the benchmarks significantly, right? So it's about managing the perspective and being able to educate them and guide them accordingly. Because at the end of the day, nobody will call it 100% correctly. But it's that fund manager who's able to explain to the client and guide them and foster that relationship with them, that will give calm and reassurance to clients who are fearful in those situations.
Mhm. So I guess this is kind of related to what was asked of Kate kanina, no? Parang this is where the soft skills come in, no? Like how we communicate with our clients and help get their trust and confidence, no? So that they themselves can be more confident then. Okay,
Correct.
so um I'm sorry, guys. We are out of time. So let's have a show of appreciation through Zoom emoticons and thank our speaker, Mr. Bryce Santos, for his time and sharing with us an overview of how to construct client portfolios. So you can just click on the clap or heart emoji. Um, thank you. Okay, so I return the floor back to you, DJ, to continue with the program.
Ed, thank you, Ed, and thank you, Bryce. Thank you for all the insights that you have given to the candidates. And as our token of appreciation, we present to you the certificates for PJ Fizz. All right, so we'll have it on the screen. Okay, so the CFA Society Philippines presents the Certificate of Recognition to Mr. Jan Bryce Santos, CFA, for your valuable contribution as a speaker on the topic of constructing the client portfolio at the Philippine Junior Finance and Investment Summit 2021. The future starts now. Given this 10th of November 2021, signed by Dr. Robert Ramos, CFA, Kaya, President of the CFA Society Philippines. Thank you. Please use your reactions for everyone who, for our host and, for our speaker and for our moderator. So as we present the certificate of recognition to Mr. Edward Hernandez, CFA, for your valuable contribution as a moderator for this topic of constructing the client portfolio, and signed by Dr. Rob Ramos as well. So thank you guys. Let's use this opportunity to have a quick photo op. Again, our sincerest appreciation for your time and effort for being here today. So, all right, let's just have everyone turn on your cameras and smile. Okay, in 3, 2, 1. We're just waiting for the pages. There. All right. So, are we done in the back end? Nakuha na ba yung
Yes.
pictures?
Page
All
2
right.
now.
Okay, okay.
Third page. Last page. Done.
All right. Okay, thank you, everyone. All right. So we will have our closing. So congratulations to the Guess the Logo game winner. All right. Mr. Xavier Kabungkal. All right. So, Mr. Xavier Kabungkal, please message us through our PJ Fizz Facebook page for instructions on how to redeem your call-funded certificate prize. All right. So please go to the CFA Society Philippines mobile app to complete your survey for our day 1. Kindly note that this is a requirement to get our e-certificate. We would like to take this opportunity to thank our sponsors and partners, our platinum sponsor, MSCI Philippines. All right. Our gold sponsor, AP Securities Incorporated and Call Financial Group Incorporated. Our silver sponsors, Atram Trust Corporation, DPP Daiwa Capital Market Philippines Incorporated, and Papa Securities Corporation. Our media partners, Business World, Publishing Corporation, and Business Mirror. Our event partners, Bureau of the Treasury, the Philippine Stock Exchange Incorporated, and the Securities and Exchange Commission. So thank you again, once again, Bryce, for all your insights. And I hope all the participants have had a lot of insights, and maybe this is your chance to think about the portfolio manager track, and maybe if you want to be a portfolio manager. See you tomorrow for day 2 of the PJ FIS 2021. The future starts now. Thank you, everyone.
Thank you.